Right now, we missed him last week, but we've got him this week, and that is Jim Lynch. Jim joins us on a Tuesday morning, and Jim himself, well, he's got many, many years of experience on Wall Street, the economy, politics, sports, and we like to talk about some or all or a portion of those. Good morning, Jim.
Good morning, Marshall. Morning, everybody. Hope you're all doing well.
You know, I look forward to Tuesdays because early in the broadcast on Tuesdays, we do an appraisal segment with Tim Luke and Greg Strom, and we get to talk about all the money that people spend on auctions and what things are auctioning for, and of course, sometimes in the millions, sometimes in the tens of millions of dollars. And I also get to talk to you, and what we talk about, money, politics, but the story that I'm going to lead into, Jim, and I'll get your comment on it. It's got two parts. One, of course, when Donald Trump was president, he said that if Joe Biden was elected, the stock market would crash. Of course, we all know that wouldn't happen. It didn't happen. Stock market reflects and goes up and down a little bit on election, but basically it means very, very little to a president. But a story like this, most people don't understand, Jim, and that is the collapse of the U.S. hedge fund. I think that's Archegos, $10 billion in losses right there. That is the type of thing that should rattle some people, even if you don't understand about hedge funds and about banks. But what's your take on that story?
Well, this is a bit unique. However, the fall was caused by something that happens very infrequently, but frequently enough to remember, using too much leverage when investing, in this instance, in stocks. The history of this particular debacle is the man who was running the fund had been basically disciplined and not allowed to manage people's money like, I think, 2010, 2012. But he was a very smart guy, and he basically built up his reputation again. But he wasn't using investor money per se. He went to various banks like Credit Suisse and the Nomura Securities, and he borrowed money to finance his stock purchases. What is not clear is just how much each of these banks knew that he was borrowing from other banks as well as their own. So what happened was there was a number of banks and some brokerage firms that lent him money to buy stocks. And then when some bad market news hit and people began realizing that there was a big whale who didn't have any credit behind him other than the stocks that he had purchased with other people's money, the market basically sold down. And the banks who had lent him a lot of money, he had been using the collateral that he had bought with their money. They started selling his stock. So this was a pretty unique thing in terms of hedge funds. Hedge funds normally take in people's money, other people's money, not from banks. Sometimes they borrow from banks as well, but from individuals. And they trade it. And sometimes they're very successful, sometimes not. Sometimes they hedge their bets, sometimes not. But that's a traditional hedge fund. This is not a traditional hedge fund. They basically were trading their own money and went out and borrowed a lot of money in the billions to buy stocks that, as long as they were going up, everybody was happy. But once things began getting a bit seamy, it fell apart. So it's, I'm not saying the man was scheming, but he certainly knew better because he had been in the business, has been in the business for many, many years. And he just took advantage of a banking system, or rather banks, that basically wanted to make some money in this very short interest rate environment where you don't make much money on short-term interest rates. And so they basically leveraged up and made a lot more money, feeling that they were somewhat risk-free since this guy had collateral behind their loans, the stocks that he had bought. They just didn't realize that he had gone all over getting people to give him billions of dollars to buy stocks. He had a good reputation. He was well thought of. He was trained by many people in the industry who really knew a lot more than many other people. So, in sum and substance, that is it. However, for the individual investor, hedge funds is something that if you have a lot of money, whatever that means to you, then before you invest in anything of a speculative nature, including a hedge fund, you should consult with your lawyer and your accountant and look at what the hedge fund says they're going to do with your money. And there should be a written document that tells you the risk parameters and so forth. If you want to take risks, there's no problem with it as long as you understand, one, what the risk is, and two, you're willing to lose X amount of money in the pursuit of a lot of money. That said, I'll go to something we covered long ago called Bitcoin, which kind of topped out a bit at around $63,000, we'll call it, and then dropped 20% over a weekend. Now, here is an example of how leveraged is being used by individuals to their detriment. The people who specialize in Bitcoin investing or Bitcoin speculating, basically, for little people, they can get a large amount of Bitcoin on margin, meaning they put up a small amount of cash and they buy their Bitcoin. Well, when the Bitcoin goes down, as it did 20%, I guess, last week, then those people are told, put up more money or we're going to sell you out and you're going to take a loss. That, on a very simplistic basis for the average investor who just recently, is what happens when you use leverage and you kind of don't know what you're really doing. GameStop, which we've covered on the show, is another one, where basically a couple of these new brokerage-type firms solicited people to get involved in that company because it was a big short position. People sold the stock they didn't own, and a word of mouth, and everybody jumped in and drove the stock up several hundred points. And then it came back down several hundred points because basically the leverage was moving the stock, not earnings, not a great outlook for it, but speculation. It's very important for us to, if you're interested in Bitcoin at all, unless you have a ton of money, I suggest you not be. But these speculative things are going to have to come under the control, more control of the federal government. We can't have a lot of noise and everybody talking something up when there isn't any regulation. Frequently, we don't know who these people are who are buying it. Sometimes Bitcoins are used for money laundering. But more importantly, keeping it simple, you should not speculate, one, in something you don't know at all, and two, where the odds are so great against you. The market as we've been saying here, with the unraveling of this so-called hedge fund and the comings and goings of the Bitcoin, it's a bit frothy. We're at highs, all-time highs, and we're having a lot of people beginning to move their portfolios around to take profits, obviously, but to move to different instruments out of maybe high tech and into the more basic stocks, or the more basic companies, rather. But, nothing ever goes up forever. And in March of, I believe it was last year, not too long ago, the Dow Jones average was about 18,000. It's currently 34,000. It shouldn't take a rocket scientist to figure out that gain in a very short period of time is indicative of pressures that eventually, when they give out, you'll have somewhat of a collapse. I don't mean a 50% collapse, but a collapse. So if indeed you are a stock investor, you've done very well, you should be looking at your portfolio with your accountant, certainly with your advisor, and picking out those situations which might be a little too much ahead of themselves and taking your profits, either moving to the sidelines or into something that might pay a better dividend, or into something that is not selling at such a high price times earnings. We've already seen in the last, give or take, last couple of months, it's been gradual, the high-tech sector getting hit for kind of exactly the reason I'm talking about, that, nothing grows to the sky. If it grows to the sky, then the thunderclouds come about and it knocks them back down. So I'd say prudence is really now more than ever warranted. And if you haven't looked at your portfolio and you feel the world is a great merry-go-round, please look at your portfolio with an advisor and figure out where are we? I mean, if you own stocks at 40 times earnings, well, they're probably not cheap. They probably should be sold, or a portion sold. Coming up is probably a capital gains tax, which is warranted since basically there was a giveaway to wealthy people in the huge tax reduction of a year or so ago, which has put a hold in our deficit. We've got a lot of things to do as a country. Our infrastructure is 50 to 100 years old, and it sounds boring, but, folks, you ride those roads, use those utilities. Ask the people in Texas about utilities. Ask the people in Florida about the hurricanes, which cause so much damage that their insurance rates on their homes are soaring. We need to take care of these things because they might be basic, humdrum day in and day out, but when all of a sudden things collapse or deteriorate, we're really in big trouble, not just personally, as in the case of higher insurance rates, but in terms of a long-term future for the economy, the stock market, and our own way of life. So these things that Biden is proposing are very, very necessary things. And getting capital gains tax increased, particularly on those who have a lot and have made a lot, is very important to keeping the country rolling. What we have to really understand is that we are a country of people, obviously very diverse and of different wealth categories and so forth. But if we're going to keep going in a prosperous, healthy way, we need to bite the bullet in terms of financing things that are for the well-being of the whole country. You can have all the money in the world, and if suddenly the health service is down or you can't drive somewhere to get a doctor, it doesn't matter what you have. Okay, long and short, I've gone on here, I thought, more than I should, but I think I covered a few points which I wanted to cover anyway.
Now, I have another question for you, because I'm tending to look a little bit more at business news in depth, and something I didn't understand that maybe you can explain that other people might not be aware of. The Federal Reserve, 3-month currency swap, that's going to come to an end on July 1st. They're going to continue the 7-day maturity. What exactly does that story mean? I don't understand it at all. I mean, what's the difference between the 3-month currency swap and a 7-day one?
I'm sorry again. I had to switch phone. There's something wrong with it. What did you say again, Marshall? I'm sorry.
The Federal Reserve, they're getting rid of the 3-month currency swap that they do. They're keeping a 7-day maturity continuing, and more than $1 trillion goes through it. So I don't know. I don't know. I see this story, and I don't understand what it is. A currency swap. I mean, can you explain that?
A currency swap?
Yeah.
Very simply, if you have dollars, you want to swap them into marks, not German marks, euros, because there's an advantage in what you're looking at, that you think that the euro is a better value over a period of time. Also, in the currencies markets, frequently, like in the stock market, you have people are buying and selling and speculating. One, because of the value is thought to be better in one than the other, but also there's a little discounting of future. The duration you're talking is rather short for that. So I think what's going on is simply people realigning their overall, governments realigning their the currencies that they own in reserve. Every country has some in reserve, various euros or dollars or yen or even yuan. And when rates fluctuate, people act and they trade them, or people move markets because they want to get more of a given currency. And that might be because there's a huge trade imbalance, and they want that in the currency market.
All right. Well, maybe you can explain to me why so many countries. This is also taken from headlines that I see. Why do so many countries now? We used to be our currency was backed by gold. Now other countries in the world are also now going over to gold. Is that a response to cryptocurrency, or is that just something else altogether?
Well, the dollar was king certainly since the Second World War, and we became a leader of the free world, and not only of the free world, but the non-free world, whatever that might mean, relied on the dollar for trade. And now the world economy has grown to a point where other countries are very strong in their own right, and therefore their currencies are very strong in their own right. And the net result is currencies are moved around based on trade and based on people's outlook for the future of the country, which is why it's very important that we start correcting some of the problems we have in this country. Let me try and make it really, really very, very simple. During the last 6 months or so of the Trump administration, people such as myself were very concerned that if it continued and we went to an authoritarian fascist type government, it would basically hurt our dollar and basically hurt our standing in the world, that we no longer would be a leader of people who wanted freedom and some authoritarian person. And that, thank God, never materialized. But as I would explain to folks, that was a real risk, as I saw it. A long-term, a long-shot risk, mind you. I didn't have any great certitude on it. But if indeed Trump continued on his ways, you would have seen the U.S. dollar kind of collapse as people said, we don't have faith in the USA anymore. We don't have faith in them as leaders. We don't have faith in them as allies in terms of defending us all together. We don't have faith in them as keeping their promises on trade. And so, therefore, the dollar would somewhat collapse. That's where the currency aspect is very important. If you look at history, if you look at the last year or so, you'll see major fluctuations in the currencies of countries that are having economic problems, social problems, and political problems. And if indeed we went down the road of authoritarianism, you would see people bailing out of our currency and, frankly, bailing out of our markets. You can look at any stock market in the last 30 years of an authoritarian government, and you'll see they go down the tubes. And so this is why it's important to pay attention, one, to the company or country you invest in as to its strengths, and two, in the process, weigh the risk if politically they just can't function. And a great example is right now. If we can't get things passed like the infrastructure bill, if we can't get things like voters' rights passed, which ensures that voters know that they can go anytime they want and vote, then you're going to see the beginning of a lack of confidence. And you'll then eventually see that longer term in the equity and bond markets.
All right.
You know, the Japanese and the Chinese own trillions of dollars of U.S. government bonds. So in terms of dealing with them and any large international investment, we should be very cognizant that they're looking at our country as a great credit risk. Well, once we stop becoming a great credit risk, we won't be able to finance at the rates we've been able to finance at, and therefore get our economy going back to where it used to be, which was very, very sound and solid and crisp, and basically had the interests of all, not all, but of most people.
All right.
This is why these inequities now that are showing up, they're very important to watch and very important to address.
All right.
You don't want to get caught if things go the wrong way politically in any given market. Then your investments are in trouble.
All right.
I believe with Biden, we're going in the opposite direction, a very positive direction. And whether you're a Democrat or a Republican or whatever you are, you should be writing to the congressmen and telling them, please cooperate with Biden. We're a country of 335 million people, and everybody needs to prosper as much as they can based on their abilities and opportunities.
All right, we're flat out
And
of time,
if we continue this inequality in wages, it's going to be very, very difficult to get things done, and it's going to be very difficult in keeping people in positions where they want to be peaceful and the productive and so forth.
All right. Well, we are
It's
flat
up
out.
to the government to provide those opportunities.
We're flat out of
Every
time,
member
Jim.
of the House and the Senate, Republican or Democrat, are very, very responsible for what happens to these citizens. So this kind of what is it, the white supremacy moment for the Republicans, it's got to stop.
All right. Well, Jim, we have to stop.
That's an againstness.
We have to stop
This
because
was never a country againstness of its population.
Okay, Jim.
And the Republicans have put people in office who are against other people.
Okay, Jim.
It doesn't cut it.
All right.
Those people have got to be eliminated.
All right. We are
You
totally.
said Cruz or Hawley or that nut woman from Georgia.
All right. We are totally out of time, Jim. We have hit the wall.
You know, I felt I bounced a few times. I said, "What's wrong with my head?" I was hitting that wall.
All right. Well,
Anyhow, look, you answer. You ask questions,
right.
Mister. You take responsibility.
all right. I'll speak to you next week, Jim.
Pleasure.
Thank you.
Bye-bye.
Jim Lynch, and Cover Your Assets this morning here on Robin Hood Radio.